Hi, this is GG again, the guy who sounds like Mario Draghi and equally boring. I've already done a couple of videos on the 15 minutes breakout system. And I think that now it's about time that we look at an actual chart and see how the system could be traded. So without further ado, we're going to show a chart. This is a 15 minutes chart of euro against the dollar. And let's see what happened or could have happened this week. This is the first week that goes from the 30th of March to the 3rd of April. You're going to see these lines here. These vertical lines are some benchmark for me. This is when Frankfurt opens. This is when London opens, and this is where I start trading. I actually leave the first 15 minutes bar alone because I just want to see what the market is showing me on the first 15 minutes, and then I start trading. So basically I'm trading from here until here. This is the time of the day, about 4 o'clock in the afternoon, where I stop trading. Nothing magical about that. 8 o'clock is because it's the London Open, and London Open is traditionally the most important part of the FX day. At about 1 o'clock, usually in the past, at least the books were passed through the US, from the European office to the US office to be traded, and this is where I stop. So I leave these first 15 minutes alone to show me what happens. These strange things here are my R. In the particular case of euro US dollar, the calculation for the usual volatility is, for me, 20 points. So I basically transform the percentage volatility into a number of fixed points. And for this particular example, it's 20 points. So 20 points up means that this would be the entry point, this would be the stop loss, this would be the 1 hour level, and this would be the half hour level. You can't understand what I'm talking about if you haven't seen the two previous videos. So I invite you to go back and look at those boring things before coming here. The idea is that I'm using this indicator, which is a very secret indicator you can find in any platform whatsoever. It's showing basically the last significant, in inverted comma, high, with some delay because it has to be confirmed that this is a high. So the plot is here for a high, and the plot is here for a low. I don't follow this religiously, but this is a systematic approach, so we should try to do our best to follow it religiously. We will create some nuances and some things to make it better in the future. So as you can see, this level here was already used, so I can't use it again. The first fresh level that I can see is this one here. So I take this level, I add 2 or 3 points. Usually it's 2 points for the euro against the dollar, because usually the spread is about 0 pips. I use an ECN broker. ECN means that you don't deal with the broker, or you're not supposed to deal with the broker directly. The broker is passing through the orders to a panel of banks that makes a price. So you usually have a much better bid offer spread. But in order to achieve that, you need to pay the broker a fee. So in this case, we will enter here. This will be our first target. Now you have three choices here, or various choices. The first one is to try to get a one-to-one risk reward. So if I'm risking this, I want to get here and have a one-to-one risk. So I enter here with, let's say, one lot, and it depends on my risk parameters and how big my capital is, and I can go out here. More people will be happy with this 2R, but I have to warn you that this system finds it really difficult to get to 2R. Or I can get to half R and risk 1 to get half. It's a trade-off. If I get to half R many times, I usually have more money than waiting for 1-to-1 or 1-to-2. It's a hit ratio. But of course, I will have to trade longer and more, and I will pay more fees. And this is why it's important that you actually write down everything in order to test it and find out what is the best possible combination over a long period of time. Now, this is a tricky example, but I have to use it because it was the first trade of the week for the euro. As you may notice, it basically reached the half R. It didn't quite get it. I tend to prefer to have a break-even point. Now, if the market basically reached half R, to me, is a break-even. I don't want to see the market almost getting to target, or the first target, and then coming back and then losing the position. So if you're using this religiously, you didn't get quite to the target, and the market reversed, and it would have hit your stop loss here. Remember, this is a stupid way of doing things, but it's the way we are using it. And it's a fixed amount of points. The most clever place to put a stop from a price action point of view would be this one. Now, if you're using this one, remember, you're using a 1R. So if your 1R is 1%, you're always using 1%, but on a different kind of amount. So in this case, in order to get to 1-to-1, as you can see, the target is higher. In this particular case, it wouldn't have made a lot of difference, because instead of being stopped out at 20 points, you would have been stopped out at 25 or 30. And the result would have been the same, minus 1R. So you get a loss. That's fine, no problem. You just write it down and look forward for the next trade. The next trade is this one. It's a short. The stop is up here. Let me move this out of the way so you're not confused. The stop is up here. The market goes down. It reaches half R, and then it retraces. So again, this is another illustration why if you use a particular set of rules, you have to be consistent and test according to those rules. We have a very nice example here. You can use a rule that says if I entered, I don't have a break-even point. I don't take the first half of the position at half R. I just want to go for 1-to-1. In this case, you would have suffered a bit here, and then you would have got here. And in this specific case, the market actually had a pretty good breakout and it went to 2R. Or you can say, okay, you know what? I'm very conservative. I'm more scalping kind of guy, and I'm quite happy with taking everything off at half hour. I would have got my half hour here. I would have got a flat position at this particular point, and if this is the case, I could have re-entered here and got another half hour. So you see, what is better? It's just a matter, number one, of personal preferences. If you don't feel comfortable in having this sort of price action and feeling that you could have got something out of this trade, but now you're losing, well, probably half hour is better for you. If you don't mind and you want to go for a bigger fish, but risking more in terms of probability of hitting your targets, well, you can go for 1R, or you can even go for 2R, or you can even go for half a position out of 1R and half a position out of half R. Now, a very important point here is that when I discuss with different traders here at our group, you don't have a univocal attitude here. Some people are quite happy to take half a position off or the entire position off at half R, and some people can't stand it. And if I force anybody to take everything out at half R, I know that if they prefer to have 1 to 1 or 1 to 2, they're going to hate this system, and then they're never going to perform as well as somebody else who instead has a more scalping mentality. This is going back to the things that we are talking about of having this systematic approach and understanding what is good for you. Obviously, it has to make sense from a money point of view, from a statistical point of view. Do you have more money doing strategy A or strategy B or strategy C or strategy Z? But if there is not a big difference, I think you always have to go for the strategy that suits your personality. I want to show here another example. This is the 31st of March. We're still talking about the Euro-US dollar, 15 minutes breakout. And as you can see here, you have this sign here. This is an actual trade that I made based on some other things. And this is just an illustration on how I don't follow necessarily this particular rules that we are looking. These are for illustrative purposes, of course. And I don't want to confuse anybody, really. But I just want to stress the point that you have to have your own style, and you have to develop your own style. And even if you're following exactly what I do with this system, it might be that you just can't do the things that I do, not because I'm more clever than you, but because I designed the system and you didn't. And your personality may be very, very different from mine. So you have to try and find your own style. And to do that, you need a lot of time and a lot of experience. And nobody wants to spend too much time and build up experience, because they are sold on the dream that if you follow a particular system that you buy for £1,000 or £10,000 or whatever it is, you're going to be successful in a month. That doesn't work this way. Okay, well, let's look at the rules. The rules are that you should enter at this particular level. you should have your own strategy. If you are following strategy A, which is taking everything off at half R, you would have got your half R here. And then if you have a break-even point, you would have been taken out at break-even here. Obviously, first you would have had the win, so this wouldn't count. But if you have strategy B, which is I'm going to look at 1-to-1, so you would have got your target here only if you completely disregard the idea of having a break-even stop. Or you could have had half strategy C, let's call it, half a position taken out at half and half a position taken out at 1. But in this case, if you use the break-even points with this spike, you would have been taken out. So you would have had half a position at half R and the rest out at break-even. In this case, you would have made 0.25 R, which is half of this half. I hope that that's clear enough. Here you have another example. This is the next level. You see the level is here. You would have entered a few ticks above this one, and here you would have been quite happy to have the half R, and if you have strategy C, half R here and 1 R here, you would have been quite happy to get the break-even rule in, because you would have made another 0.25 being stopped out here. But if you didn't have the break-even, you would have given up everything you made here. You would have had a stop loss here. So again, the only way you will know which strategy is best is by looking and testing and writing down everything that happens to that particular trade. The more you write down, the more you will know. And for our purposes, you might remember this from the previous video. This week, this would have been the equity curve of the 3 different strategies we are testing. Okay, this is everything out at half R, the gray line. This is everything out at 1 R, the blue line, and the orange one is half out at half and half out at 1. This particular week, the strategy of scalping, in a way, taking everything out as soon as possible at half R, would have made more money. Again, there are all the caveats. You might trade a little bit more on this particular strategy, depending on how you use it. So you might have a little bit more fees to pay for. What I notice is that if you don't trade massively, it doesn't make a lot of difference between one and the other. But definitely, other things equal, this particular strategy looks better suited to make money with this particular system. I want to show another interesting point. This is the 1st of April, still Euro US dollar, 15 minutes. And it illustrates the huge level of frustration you may have if you trade in a systematic way. Remember, this is Frankfurt Open, and this is London Open. So there you go. Sorry about this. We are trading from here. Now, something happened in this market, and the big move happened before, well, actually on Frankfurt Open. So you would have entered at this level here, but at that level there, you're still having breakfast, or definitely you're not trading. And it's very, very tempting to try to jump in uh, at at a later level. Now, you have to be very disciplined. Your signal, your level, your breakout level is this one, and nothing has been formed yet. So you can't do anything, and you're watching this huge drop without being able to do anything. If you do anything, you will be breaking your rules. And another frustration is here. This is your first signal for the day. That's your level. And if you're looking at a one-to-one, you don't get it. And there is a chance here that you may even have lost this short, even if the market was tanking. So you have to be prepared to live with these situations. You're following rules. You're not trying to outsmart the markets. You're not trying to be more clever than anybody else. You're just using some rules that, if you've done your job properly, have worked in the past, and you're hoping that they will work in the future. Simple as that. After this, again, you see, this is the time I finish trading. After this, I didn't have any other trade. Well, maybe this one would have been probably another half hour or a break even if I was using the scalping system. And I would have missed the entire trade. Again, if you don't like this sort of trading, of course, there are many other systems, and this particular system is based on some particular rules on breakouts, and sometimes they work very well. If this would have worked, happened after London Open, after the first 15 minutes, it would have been brilliant. But sometimes you just have to suck it up. Okay, I stop here because I think I've already confused quite a lot of people. If you have any questions, well, you know where to find me.